How you guys doing today? Hope everyone is having a good week. Lots of things happening in the last couple of weeks, but I would say a pretty stable so far. We've seen some interesting flows for the US dollar last night. Most likely will continue to drop in a sense. So for today, what I'm going to look at is the NFP week. Interesting enough, it's on Thursday. It's not on Friday. I'm not too sure why. I've never seen NFP on Thursday, but we will see. Anyways, the NFP is on Thursday, and that's it. So it's the NFP week, and a lot of rate cut bets are in focus as well, and that's degenerating the US dollar strength. So basically, very, very weak US dollar. With that, we have some sort of strength on the Canadian dollar. Interesting enough, because oil prices continue to fall, but that's because US and Canada trade talks, they withdrew its digital service tax, and that basically made the Canadian dollar be a little bit stronger. Also, Thursdays, as I say, Thursday NFP, it's one of the, of course, everyone knows the most important thing for the week. And if we got any softer number than expected, that could probably continue to, reinforce expectations for the cut from the Fed. So continue to ease, maybe even more than 75. I don't think it will, because we're right on the start of Q2 already. So nothing predicted for July, but 75 base points predicted into December. So most likely won't make any higher numbers, but it will probably continue to be more dampened on that. And of course will impact the US dollar performance. Then the Bank of Canada policy outlook. So, with Canadian core inflation at 3% and employment at 7%. So for those who think it's bad for US dollar or Australia, they have unemployment around 3 to 4%. Canada has an unemployment rate of 7%. Yes. And, the Bank of Canada has a lot of room to maneuver and potentially cutting rates if upcoming employment data shows further softening. So what we basically want to see is a continuation of softening data for Canada. We would like to see, if you want to trade bullish on US dollar, a reversal from deteriorating data to positive data, so bullish data, and that would be pretty much it for a good US dollar CAD setup. And let's talk about the US dollar weakness first. Lots of people have been trading US dollar, and as I said on Monday, so yesterday, about the US dollar index. Let me just come back to, where is DXY? There you go. Well, as I say, I thought that could be the potential range until Thursday, because usually on the week, we do have on the week of NFP, we do have a ranging until the release, but that didn't quite happen, all right? And we still have a gap to be filled, all right? So let me just bring this one here. From here to here, pretty much. So we have this small gap, it's very, very small. It's like 100 points, 10 pips, pretty much on the US dollar index, but it is a gap, right? So it doesn't matter when, it doesn't, I really don't care, but it has to be filled. So that was the reason why I thought, most likely this will continue to be on a range. And therefore, when we have the NFP, we would get... So, it would continue on a range. Hopefully, well, let me change this color, because there's too much things. Wait a minute. Let me just take all of this off. It's too much things on the chart. I want you guys to see this clearly. Perfect. So I was like, okay, cool. Most likely we have this sort of consolidation going forward until Thursday. right? As this NFP is not on Friday. So just be careful, guys. Sometimes it could be on Wednesday for you. So very tricky time. Anyways, let me just grab now the path and change the color for that to white so everyone can see it better. So I thought, what could potentially happen was basically this, and then a continuation. And then on the NFP day, a small spike up to close the gap and a continuation down. That's exactly what I thought it could happen, right? But ended up that the pressure was so much and that the attention of the market is not on the NFP, it's on another thing that we're going to talk in a second, that the market just took out without doing any consolidation for the week, right? But just be careful because it potentially could come and close this gap. I'm not saying it will, but I'm just saying it could. All right. Awesome. So let me take this off now. Why is US dollar continue to fall? That's a very simple question to answer. If we look at the CME, we have to look back into January. So into January, we had an expectation of 75 base points cut for the whole year. Right? That being said, markets sort of pricify that, and the yields pricify that as well. So if we look at the 10-year yield, let me go into daily. So if you look at the 10-year yields into January, there you go, it pricified on a higher basis. All right. Then we had for the first half pretty much that. All right. So Jan, February, March, we had all of these. On the second quarter, we've had over here. There you go. Yeah. So they pressify 75 base points cut. So the market sort of fell. Now they're pressifying no cuts on the second quarter, and then the markets go up. And then just on last week, they're pressifying 75 base points cut, and then the market goes down. So interesting, because if we come to the CME Fed Wash tool, you can see that July, that's exactly where we are. Let me send this link to everyone on the chat. So there you go, it's on the chat. So because on the CME, you can see that there's 78.8% of the market expecting no changes. So if you look here, here, and here, you can see there's no changes from these two. Okay, and there's 78% of those people on the pool voting for no changes. As of here, 4 to 425, it's different already from here, and that's a basically 25 base points cut. So only 21.2% is expecting a cut. So basically, very, very, we can basically say 80 to 20. All right, so 80% are not expecting anything, 20% is expecting 25 base points cut. So the highly likelihood of a no cut into July, but that's only on the 30th of July. So we have quite a big time, so 30 days pretty much. That can change. That can change quite often, very, very fast. And the reason why I'm saying this is because of the NFP, all right? And as I say here, oopsie, sorry. There you go. And as I say here, the NFP report is pivotal, all right? If we get a softer than expected number, that could reinforce the expectations for Fed easing, and that will continue to impact negatively, so bearish, for the US dollar. So meaning that if you want to trade US dollar short, I would be looking at shorts on US dollar Japanese yen, okay? So I would continue to hold this short on US dollar Japanese yen that we've been since last week. The reason is because the market is risk on, okay, and you can see it's like Aussie against the US dollar continue to go higher. You can see New Zealand dollar against the US dollar continue to go higher. And, just at this trade, this trade was very nice. Just literally touch it and then gone up. All right, so that's pretty cool. Anyways, so coming back to US dollar yen, I would say that US dollar yen is one of the best opportunities to short the US dollar because the market is on a risk on. All right, so therefore it's not looking to have US dollar because US dollar is a safe haven. So when everything is not going well in the world, or when the inflation is climbing everywhere, all of those things are happening, like the COVID and everything else, this is where the market goes for the US dollar. So they go to US dollar and they store the value into US dollar, or they store the value into gold, both of them. Okay. But nothing of this is happening. So therefore, with cuts being precified and we have the NFP, if the NFP comes lower, then we have a trade opportunity to short US dollar yen, to long euro dollar, right? To long euro dollar. Maybe we can even wait for something around this area. I'm not saying it will come, but it could do something like that. And we can go to 120. All right, but I've mentioned it about the 117 last week, and we had a hit. All right, and I'm talking about 120. All right, on US dollar, euro against US dollar. Let me take this off, and let me put it here. 1.20. There you go. There you go. So 1.20 would be my long target, but if sort of medium term target 1.19. All right, it's very close. It doesn't look close, but swear to you, it's very close. It's just a pullback here and a continuation up. Most likely we can get that in this month. All right. So again, if we see an NFP below expectations, this probably will increase to higher. All right, to higher probability of cuts. So meaning that this 78.8% would go lower, so maybe to 60%, and this 21.2% would go to maybe 40. And that being said, basically we had an inversion, all right, people not believing anymore on this cut. On not cutting, and to believing to cut. Even if they don't cut, what will change the most is the September, the October, and December. So if you click on September, it's completely different. So you have 75% of the whole CME pool expecting a 25 base points cut, because if you look at the current target rate is at 425 to 450. And then you look at the target, you look at the 75% is expecting 4 to 425. So therefore, it's a 25 base points difference, so 0.25%. All right. For October, remember, if we do cut in September, we would be in 4 to 425. So therefore, we have 59% of expectations for another 25 base points cut from 4 to 3.75. All right. And if we do cut in October, 375 to 4, we would have another 25 base point expected. All right. So maybe the short tailwind, the short tail of the distribution won't change much. Okay, because it's already too soon. Right. It's literally in a few days, the NFP. But if we look at the fatter tail of the distribution of September, October, and December, we most likely will see an increase on the behavior of those these 75% may become 80. Because those people won't believe anymore in a cut, so therefore it will be translated into a cut. But not a 50 base points cut, but a 25 base points cut. All right. And then same goes for those two. So 26% would be increased to 60. So that would be 86%. All right. So 86% would be believing on another 25 base points cut, and the rest of it, will continue to believe in a 50. But what I'm trying to explain is the people that were not believing in a cut will most likely jump into a cut. Okay, there's some people even believing into 25 base points only in October. I think it will happen more soon, like September. And then December is like December, the same thing. All right, 0.3, 6.1 to 31.8. So pretty much 37 to 38% will jump to 50. So 82, 83% will be expected to cut. Okay. So that being said, it doesn't look any great for the US dollar. All right. So what are my targets for the US dollar index is, I'm going to use here a very lazy, let's say, simple way to measure the target. And that is just take a consolidation and put into Ctrl+C, Ctrl+V and measuring the consolidation down here. Okay. And my target for that nearly got hit. All right. So that was pretty good. So nearly got hit it. And now it's coming back. Interesting. Yeah. So the market sort of reacted pretty quick in a sense of what happened in this CME and the market precifying 75 base points cut for the Fed. Okay. Anyways, yeah. So that being said, US dollar yen is one of the goodest opportunities. All right, so continue to short into 143 and then 142,500. Euro dollar would be a good long position, but just careful. We would need to wait for some sort of. Let me just get to this one. We would need to some sort of pullback. Okay. So something like that, a pullback would be great. Then we got Aussie against US. Aussie against US. I've been looking at some reports like Goldman Sachs and etc. We have a few reports suggesting around a 68. Okay, so 68 is up here. So 0.68. So 68 would be up here, and that's a 4-hour chart. So it could happen. It could definitely happen. Not in a month or not in 2 months, but remember that US dollar against Australian dollar has just get out of this consolidation of the 65 to 64. So we've been into this consolidation for quite a while. Over here, we've been into this range for quite a while, and then just now we're sort of getting out of it. Okay, so I do believe we can continue to see a 68 or even 70. All right, until end of the year. So we do have another 6 months. Well, we have pretty much 6 months to go into that, and then we would probably continue to see strength for the Australian dollar. Okay, I do believe on a more risk-on market from now on. So minority volatilities into risk-off sectors would be faded off, in my opinion, and most likely structural longs for Aussie, for New Zealand, and would get more flow in than risk-off currencies like US dollar, Canadian dollar, gold, etc. So I continue to believe on a stronger risk-on rhetoric. All right, cool. That being said, also nzdusd is a good trade. I've mentioned that trade already. So if you've not been able to get into this trade, wait for a pullback because we haven't yet broke that top. Over here. Sorry. Yeah, I'm not going to consider this as a break, and especially as like a doji or something like that. Literally won't change any of my thoughts on that. So continuation of this trend down could happen around this area here, and then a continuation up to 61,300 or even 61,500 if you want to increase your pips. All right, let me just check it here. There you go. So that would give us around 75 pips. In New Zealand dollar against US dollar, it's more as this low mover, but it gets the business done as well if you get it right. Okay, cool. So Aussie dollar long, New Zealand dollar long, US dollar yen short, euro dollar long, and of course pound dollar long as well. Pound dollar tends to be very, very how can I say that? Extended. All right. But take this off. But I still continue to believe we may see a pull, a touch on the 139. If we go to the 1 hour, smaller time frame, sorry, Switz, what did you mean by aggressive? We had a few gbpusd. Oh yeah, no. I mean, it's more like it is aggressive, but I think the right word would be directional, very directional. Okay, so if you are into the trend and you can just manage your risk to continue on that trend, that's fantastic. Okay, you can just continue to ride the trend. But if you get caught offside, then it's a bit of a problem because the market is very strong on the pound and it's just continued to move. Okay, so yeah, that being said, I believe on the pound strength continuation. Maybe if it tries to pull back, it would somewhere be here. Sort of fail to continue the pullback, but probably won't. So just continue to believe on a break of the 137 700 in 2020 722. Okay, cool. So these are the trades for trade the US dollar weakness. All right. So where are you looking to sell from US dollar Japanese yen? Well, US dollar Japanese yen, oh gosh, USD Japanese yen. There you go. So for the US dollar yen, we've been into this trade since last Tuesday, if I'm not wrong, or last Thursday. Yeah, last Tuesday. Okay. So as I say, the momentum would intensify, break through this area of 144. So that's exactly what we're getting at the moment, right here. So the momentum is intensifying, and as soon as today's, New York session opens, I'm not saying it can intensify to down. I'm saying it can intensify, so it can become chaotic. All right, it won't become more stagnated in a sense. If you want to do a second entry, I would look at supports and resistances like this one, and then try to, let me just put this aside. Let me get this one here. Where it is? Oh, there you go. Short position. I'll try to short in here with stop losses a bit above this top, and take profit below this area, at least to try to get a 122. So you would be risking 73 pips, let's say 74 pips to get 140 pips back. So that's pretty much a 122, but mainly would be looking at the 138 mark for quite a while. Okay, I've been looking at that area. So 138's down here. So 138's down here. If you keep, if you've been into the position since 145 800, and you keep just managing the position, I think you could carry this trade up down to 138, and that would be the best possible scenario outcome for this trade, because that's the main target. It nearly got hit it before at April, but then in June it sort of just consolidated, and now it's pulling back down. Okay, so I do believe on this continuation down at 138. My main target is 138, but for short-term target would be just on this support here. Okay, cool. All right, any more questions related to that? No. Okay, cool. Now let's talk about the Canadian dollar. Okay, so the Canadian dollar is been quite strong. So let me bring this chart up. There you go. Aussie CAD. Okay, I'm gonna get that in a second, Switz. So that's the price action that we had last week. So the stellar CAD was testing this resistance, the bearish candle demonstrating the CAD strength, and then the WTI prices did a bit of a rally. The CAD sort of strengthened it and went down, and then the WTI prices went all the way down. So US dollar loses, Canadian dollar starts to strengthen again due to the rising oil prices overnight. And that basically what was trading last week, okay? Then we had this huge move down, and that is because the US and the Canadian dollar, they agree into a deal that would withdraw its digital services tax, okay? So US, Canada withdraw digital tax. Lots of people entering, just a second. I think, yeah, all good. So they basically stopped talking, all right, and that was the main problem for the Canadian dollar and for the US dollar. If you look at here, let's say on a daily chart, one day, let me just hide all of that. Okay. So since beginning of this year, very consolidated, and then Trump said that he would impose 50% tariffs on Canada. So market goes up on US dollar, and then Canada says that they're not going to let that happen, and then Canadian dollar becomes strong, and that was basically the fight, and in a continuation of that during the war and everything else. So if we look at now, what is moving the Canada dollar is two things. So basically the US dollar and USA and Canada starts to talk back with each other again. And that is reigniting some tensions about, will Canada let the tax do come to Canada, or will USA be the big boss here and, sort of continue to be leading the Canada industry, etc. And the second point is oil. So oil prices have been quite choppy in the last month for those who are new into the market. Usually it was trading around $70 to $75. And it went up all the way up to 75 and down to 64 in a matter of a week. Right, in a matter of a week. So that was really, really volatile. And you can see it right here that we were sort of maintaining a way of it around $78 to $68, so a $10 gap. And then we've sudden break that down, consolidated again between 54 to 62. And then we saw all the way up again to 76 and all the way down to 65 now. So I believe the Canadian dollar has a lot to do with it. All right. So every time the Canadian dollar strengthens, is due. There's a lot to do with WTI prices or Brent, whatever you want to call it, oil prices going up. All right, going up in prices because the balance sheet of Canada will become a surplus, in a sense of if you have a country, if you are the president of a country, whatever you want to be, of a nation, you you have your resources. Okay, every country has some sort of resources. Australia is like iron ore and minerals, etc. As of Brazil is like coffee, gold, metals, etc. As of Canada is basically oil, and a few other things, but majority oil. Okay, so one of the biggest producers is not Canada, but it's on the middle of them. All right, so let's say you have oil and you stock in oil, so you have 1,000 barrels of oil, and every barrel has, say, 100 liters. Okay, so it's $64 per barrel. All right, so in a sense, you have $6,400 in storage. Right, just sitting there. Sorry, 1,000. It's a $64,000 in storage, doing office, sitting there. If the production cost of your oil exceeds the $64, that means that you would have to sell that into a loss. So you would sell it. Okay, so you would sell it to, I don't know, Australia, USA, Europe for 60, I don't know, $64, and you would get a loss. Okay. Now, if oil prices are low, okay, and you're doing production and you got 1,000 barrels for $50, and then when you sell it, the barrel go up to 64, you've made $14 literally from the night to the day, just storing your barrels. So that's pretty good trade, right? And then you're selling it, and you can do markups, etc. So that's exactly what happened with Canada. So the surplus and the balance sheet goes surplus and negative, and all of this can influence the price of Canadian dollar as well. All right, cool. That being said, now with US dollar CAD, so just coming back to US dollar CAD, what could potentially happen is a smaller drop down to 135,700. Okay, and then we can see that it's pretty consolidated. All right, if we sort of just look at this area here, it hasn't go anywhere. Right? It hasn't been going anywhere for quite a while, since June. Since June. So the whole month was just consolidated. So it didn't have any actual trend or momentum trading or anything like that. Of course, you could trade in this market here on the Iran and Israel war, but that was it. So we wouldn't have anything else to trade. So a continuation down to 135,500, it's more than welcome, I would say. Someone asked about Aussie CAD. Yeah, so Aussie CAD, it's ranging as well into the support or resistance zone. I were expecting it to come back to this support, on Monday, but it didn't. All right, so it didn't come back to the support. So I'm waiting now for either, maybe it could come back down or a continuation up and then reaching the 90 cents. All right, so most likely we will see the 90 cents being reached into a couple weeks. If it breaks above this area here of 87, okay, yeah, let's call this 87. Oh, I did something wrong. 89. Okay, 89,700. There you go. Perfect. So if we see a break above 89,700, then most likely above 90 would be a matter of minutes. But the preferable trade would be back to support, okay, or even, even down here. But yeah, that's the range has been going for quite a while now. So longs on Aussie would be preferable and short on CAD would be preferable. I just don't see a clear opportunity on Aussie CAD at the moment. If you want to trade Australian dollar, that's completely fine. You can trade Aussie against US dollar. You can trade that long. If you want to trade Canadian dollar, that's fine as well. You can trade short on US dollar CAD. Okay, down to the 135,500. Okay, so that's pretty much it for this deal. So I think this deal, if they're gonna come back to talk, they resume the trade negotiations with Canada, and that's pretty much what's going to be moving the market for Canada in the next coming weeks. So be on top of those headlines. I'm not going to be sending as many Telegram updates. I will be sending more my blogs, okay, because my blogs are the ones that I'm be putting more effort in. So on the Telegram, I will drop every day the link for the blog. So therefore, you can read it from there. All right, cool. So that's pretty much it. Now, for the NFP, we can come into FinLogic's economic calendar. Yeah, USA, recent, okay, Thursday, there you go. So it's here, but it's on Thursday. It's very interesting. It's like 10:30 p.m. on a Thursday night for Australia. Most likely will be Thursday morning for everyone. Anyways, yeah, so the NFP is expected to be 110,000 from the previous of 139,000. The average hourly earnings expected to drop from 0.4 to 0.3, and the unemployment rate is expected to go up to 4.3. Okay, so 0.1 higher than previously. So it's kind of interesting how this data is working, especially on a Thursday. What we got on Friday. Isn't it? Oh, I know why. Because Friday is holiday into US. Friday. Is it? Yes. It's an Independence Day. That's exactly why. Okay. So yeah. So 4th of July is the Independence Day for USA. So therefore, the data will be released onto Thursday. And that makes total sense. So therefore, we are basically looking for a really, really bad NFP. And if that comes as expected or a little bit softer, right, like just a tiny, tiny bit below this consensus, that would be really, really devastating for the DXY, for the US dollar index. And therefore, euro would go up, US dollar would go down, Australian dollar would go up, New Zealand dollar would go up, and all of those other ones consecutively. So just pay attention into it, because what is to come, it's very big, all right? And also keep looking into the CME, keep a track of how these behaviors is very important. They are working with each other, September as well, October as well, and also on December, okay? Cool. Does anybody have any questions? DXY after quarter close. When is Trump going to talk about tariffs again? Okay. All right, that's some good questions. So for the first question, can we short US dollar now or wait for retracement? Or wait for retracement upward? It depends on your strategy. I'm just trying to guide where it could potentially go. Now, for timing and everything, it will depend on your strategy, your risk appetite. Depends on lots of things that I can't really help you in a sense. Zodwa says, when is Trump going to talk about tariffs again? Well, just now, we have the talks the talks being, I forgot the word, reiterated with Canada. So we will have some tariff talks about tariffs with Canada and US. So they will move quite a lot, the Canadian dollar. So just pay attention into these headlines. Alex say DXY after this quarter close. Interesting, because if we look at the quarter of the DXY, so if you go like daily, the whole quarter was really bad. Okay, for the whole year, pretty much was horrible. So if you go into vertical 2025, so from here to here is the first quarter, and then this is the second quarter. So that was horrible for the whole year. Quarterly wise, it was really, really bad. Since the beginning of 2025, we haven't had any quarter positive. All right. So both of the quarters are negative. The probability of the second quarter is negative is around 50%, 55%. So therefore, I continue to believe on that move down. 94, 95, 94. Yeah, I'm looking at 96 at the moment. So most likely, yeah, 94 looks pretty decent for me. You know, if we look at an average of move for the quarter, we've had like -4% in the first quarter, -7%. So if we just come to 4 plus 7 divided by 2, it's like 5.5. So the time that we could potentially see is 5.5% down, somewhere around 91 to 5.5% up. That would be like 102. So yeah, most likely that could be reached. Down at the worst case, yeah, of course, worst case scenario would come to 91 or something, 9100. But I don't think that will happen unless the Fed just keeps cutting and being very, very dovish. If this turns more dovish than it is at the moment, believe me, US dollar index will continue to dump very hard. Okay, euro would go to 120, Australian dollar would go to 0.68, and we could see all of these flip in a matter of months. Not a problem, Alex. Does anybody have any more questions on that? Send me over the questions. All right, give a minute for everyone to think about if you have any questions. But that's pretty much what we got for today. So US dollar weakness because of the Fed, hinting of more potential rate cuts as early as July. I don't think it would happen into July because it's too early. It will depend on how the NFP will come. If the NFP comes lighter than expected, we most likely can have that as a potential 25 basis points cut into July. But if it doesn't happen to July, basically what would happen is September, October, and December, we would see a more highest probability for this to happen. Okay. Now, for the Canadian dollar, we will look at more tariff talks about US and Canada into the coming weeks. All right. So in the next 2 to 3 weeks, we will continue to see the US coming to talk back about tariffs with Canada. And they're trying to take over the tariff. If they take out the tariff from Canada, Canadian dollar would be very strong. All right, so US dollar CAD continue to fall, it definitely would be an option. All right, the NFP report is really, really important. As of Friday is Independence Day for USA. The NFP report will be on Thursday at 10:30 p.m. in Australia time. It just depends on what time zone you are, so watch out for that. But anyways, if the NFP becomes softer than expected, and remember, when I'm talking about NFP, I'm not talking about only the NFP, the non-farm payroll. I'm talking about unemployment rate, talking about average hourly earnings, plus the non-farm payroll. Okay, so those three are a whole data point. And you can't simply ignore one and let the other one talk about. No, you have to look at those three, okay? So if those three come a little bit softer than expected, like unemployment rate comes at 4.2, NFP comes at 110,000, let's say, and average hourly earnings comes at 3.2 or 3.1. There you have it. That's basically the recipe for a continuation of the DXY lower. The Bank of Canada policy outlook will continue to be bearish. Okay, if the upcoming unemployment data shows further softening, we will see higher probability of a cutting into the BOC, especially if the trade talks with the tariff talks with the US goes well and they can reiterate the tariffs. That's a good deal for them. That's a really, really great deal for them. Okay, so that would be my trades. So long euro dollar. So looking to long euro dollar, 50 minutes, let's go. Looking to long euro dollar if we go back to this support. Looking to long Australian against the US dollar. If we go to 0.68 would be a quite good scenario. Looking to short US dollar yen. Okay, maybe a pullback at 143, 850, or even 144 would be more preferable because it's a psychological number. Then we will see a pullback down at 142, 500. Okay, mainly targeting 138. Mainly targeting 138. NZD US dollar up as well. If it pulls back down again, it's already into the trade. So if it pulls back down at 60,850, that could be a possibility. Okay. What else? Yeah, gold has pretty much nothing to do. Gold rebounded all the way up again, so I'm not looking to trade gold at the moment because we've missed this short on gold last week. So I wouldn't be chasing that back again. But as I say, look at the gap here, you know. It comes back to close that. It doesn't matter where. It just comes back to close it. It doesn't matter how long it takes. Cool. And that would be it. Okay, guys, I think this is it for today. Not a problem. Have all a great week, and I'll talk to you back tomorrow from 4 to 5 p.m. Sydney time again. And we're going to be looking at some high reward, lower risk setups into FinLogic's market sentiment tool. And yeah, keep tuned. We'll be sending my blog tomorrow into the Telegram, and we chat over there. See you guys. Bye bye.